Good evening to all. Welcome to special lecture series program for undergraduate students, finance and its allied areas, organized by Kolkata Bidhannagar Society for Academic Advancement, coordinated by Azure Academic Services. Today we have Sweta Chaurasia ma'am. She is faculty of Department of BBA at THK JAIN College, Kolkata, India. Welcome ma'am.
Thank you so much.
She will deliver her lecture on structure of Indian financial system. Over to you ma'am.
Thank you so much for such a virtuous introduction. I thanks I thank KBSAA for giving me such a wonderful opportunity for teaching all the undergraduate students through this platform. I also want to thank Azure Academic Services for organizing this initiative. I will try my best to highlight the structure of financial system. Now I'm sharing my PPT. My topic for today is structure of Indian financial system and money market. First of all, I'll explain that what is Indian financial system. So basically the financial system of a country is concerned with allocation and mobilization of savings, provision of funds, facilitating the financial transactions, developing financial markets, provision of financial and advisory services in our country. Now, three activities are very much interrelated in the formation of capital, which is savings, investment, and finance. Now, there are multiple categories of financial systems. First part is financial institutions, which include banking and non-banking institutions. Now, banking here means which is organized and just a moment, which is incorporated in certain years. That is banking institutions, and non-banking institutions are not that much incorporated. First banking institution is commercial bank, second is cooperative bank, third is regional rural banks, and fourth is foreign banks. In commercial bank it comes like private bank and public bank. Second, it's financial market. Financial market is of two types. One is unorganized and second one is organized. In organized, there are two types of market, which is capital market, money market. Capital market consists of secondary market, which includes a lot of stock market, okay, and money market includes a lot of money market instruments, dealing with money market instruments. Third is financial assets instruments, and fourth is financial services. Here in the third point, financial instruments include various commercial papers, various treasury bills. Okay, treasury bills are the instruments which consist of 14 days or which is valid till 365 days. There are multiple types of treasury bills. Okay, let's come to financial services now. The financial services is of two types, fund based service and fee based service. Fund based service deals with leasing, hire purchase that includes funding. Without funding, it's not possible. Okay, and the second one is fee based service. Here, fee based service means the fee is levied in all these categories like merchant banking, credit rating. Now, if we do merchant banking, they take fees for their service. So that's why this is fee basis service. Okay. Now let's come to third part. There are multiple financial regulators that regulate our financial system of India. These financial regulators are Department of Economic Affairs, Ministry of Cooperative Affairs, Ministry of Corporate. I think there's a mistake. Just a moment. Ministry. Okay, it will be Ministry of Corporate Affairs. Okay, I think that's a typing mistake. Let's come to third part, that is SEBI. Fourth is RBI, and fifth is IRDA. Now let me explain. First of all, let me
Sorry for
come.
interruption, ma'am. Hello.
Yes, yes.
Yes, ma'am, I think a slide is stuck. Can you share it again?
You cannot see this slide.
Yes, yes, I am seeing the slide, but your editing is not visible.
Oh, actually, I couldn't edit because the PPT is on. That's why.
Okay, 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 man. You can continue.
Yes. Just a moment. Okay. There's an issue. Just a moment. Yes. So the first part is the Department of Economic Affairs. Okay, so basically, the Department of Economic Affairs is the agency of the Union government. Okay, which formulates and monitors the country's economic policies and programs, having a bearing on domestic and international aspects also. So it deals with both the national and international aspects of economic management. Okay. The second part is Ministry of Corporate Affairs. Now this is a very huge ministry in which it deals with the corporate dealings. Now, this MCA, okay, it concerns itself with administering the Companies Act and its various iterations. It also sets up the rules and regulations for lawful functioning of the corporate sector. Now there are multiple more things that MCA deals with. Okay, it also administers the Limited Liability Partnership Act 2008, and even its objective is to help the growth of the companies. The MCA Registrar of Companies authorizes company registrations. Now without the registration of the company cannot be held, it cannot be held invalid. Okay, if any company is registered in MCA, that is very much valid. Okay, because it authorizes company registrations as well as their functioning as per law. Okay, that's why MCA is very important. Now let's come to SEBI. This SEBI is also very important. Why? Because it helps in decreasing the malpractices in the capital markets that erodes investors' confidence in the market. As a statutory body, it protects investors and other participants by preventing insider trading, price rigging, and other malfunctionings. It has a power to supervise the stock exchange functioning. It regulates the business of exchanges. It oversees the listing and delisting. It can take disciplinary action also if there is any insider trading going on or any price rigging going on. It takes action for that. Okay. It also promotes investor education, how it gives training to few of the holders. It even undertakes inspections and conducts audits and inquiries when it spots any wrongdoing. Okay. Now the most important, let's come to Reserve Bank of India. Reserve Bank of India is highly into printing and circulating currency throughout the country. And all of you know that this is a very important thing. Without this, the country will not move on. So, the printing and circulating currency throughout the country is one of the main function of Reserve Bank of India. It maintains the banking sector reserves. It inspects the bank financial statements. It regulates the payments and settlements even. It manages the country's foreign exchange reserves. And last but not the least, it helps in regulating and controlling interest rates, which affects the money market liquidity. Last, last one, last of the financial regulator is IRDA. IRDA was set up in 1999 and it regulates the insurance industry. Now, whoever is there in the life insurance company or any insurance company, they have to give IRDA exams. After that, after passing the exam, they get the chance to come in the agencies like life insurance corporations. Okay, so basically, IRDA regulates this insurance industry and protects the interest of insurance policy holders. The IRDA has a very strict control over insurance rates beyond which no insurer can go. It specifies the qualification and training required for insurance agents and other intermediaries, which then have to be followed by the insurer. Also, it can also levy fees and modify them as well as per the IRDA Act. It regulates and controls premium rates and terms and conditions that insurers are allowed to provide. Any benefit provided by an insurer has to be ratified by the IRDA. This regulator also provides the critical function of grievance redressal in an industry where claims can be disputed endlessly. Okay, now let's come to next. Financial institutions. There are multiple financial institutions which provide the instruments, okay, financial instruments. Some of the financial institutions I have mentioned here are commercial and cooperative banks, regional rural banks, non-banking financial companies, that is NBFCs, and developmental financial institutions, including all India financial institutions, state level financial institutions, and other financial institutions like public sector mutual funds. Now, let me explain you some of the financial institutions of our country. The first one is commercial and cooperative banks. Now, this bank This bank is a kind of financial institution that carries all the operations related to deposit and withdrawal of money for the general public, providing loans for investment and other such activities. Okay? Now, there are basically four types of commercial bank. Okay? Public sector banks, private sector bank, private sector foreign banks, and regional rural banks. Okay? So this regional rural bank is a part of commercial bank. Now, let's come to RRBs. Okay? Now, this bank gives financial aid, okay, to the commercial banks. Now, these are the government owned scheduled commercial bank of India that operate at the regional level in the different states of India. The area of operation is limited to the area notified by the government of India, covering and it covers one or more district in the states. Okay, before, I mean to say that few years ago these regional banks were not there. Okay, it was enacted just few years before. Okay, why? Because there was a requirement of certain banks so that people get help related to money. Okay, so that's what these banks were made for giving financial aid. Okay, now let's come to next part, which is NBFCs. Now NBFCs are the banks which provides mutual fund and all. Okay, let me explain you in a detailed manner. See, an NBFC is a company registered under the Companies Act 1956, engaged in the business of loans and advances, acquisition of shares, stocks, securities issued by the government. Okay, one of the company you can say Muthoot Finance. Okay, that is also a bank which is a part of NBFC. They also provide loans. If we give them jewelries and other documents, they can provide us loans. Okay, so some of the banks are under the NBFCs. Okay, now the big question is, how is NBFCs different from the bank? Okay, see, banks and NBFCs are two crucial financial intermediaries. But banks are traditional entities that accepts deposit from the public and provide loans to public, right? But NBFCs offer various financial services to consumers without a banking license. Okay, they provide services without any banking license, right? Now let's come to developmental financial institutions that we have come to know that these have various parts also, like all India financial institutions and other state institutions, right? So there is nothing much to explain in this bank, but still let me tell you something, that this occupy an intermediary space. This financial institution occupy an intermediary space between public aid and private investment, facilitating international capital flows. Okay, so this institution helps much in international capital flows also, right? Great. Now let's come to financial markets. Now this is a very important part which we all must know. First part is money market. Okay. Now, what is money market? See, money market is an integral part of financial markets in India. It provides an opportunity for making a balance between the surplus funds of lenders and requirements of borrowers for short period. Okay. Now, truly speaking, the money market provides a focal point for central banks' intervention for influencing the liquidity in the financial system. As we know that the main role of RBI, what is the main role of RBI? It's to maintain liquidity, right? So, as we know, the main role of RBI in the money market is to maintain the liquidity and short term interest rates at all levels. It is consistent, it remains consistent in maintaining the monetary policy of the nation. Money market contains various features which is merely for short term funds or financial assets. Okay, now let's not go much into this detail. Okay, as we have this topic later on also in this particular PPT. Let's come to government securities market. Now, government securities market is a market where we deal with government documents, government instrument, which is issued by the central government or state government, right? It is a tradable instrument like low risk bond or debt issued by central or state government, promising repayment at maturity, backed by government's taxing power. So tax has also a great role in this government securities market, right? It is a principal segment of the Indian debt market. Basically, its importance lies in facilitating market borrowings by the government, enabling the pricing of other debt instruments of varying risk perception. See, there are many securities market where risk is also there. But yes, profit is also there. So we need to be very cautious while dealing in the securities market. Okay. Now, in fact, the interest rates on government securities act as a benchmark for pricing securities in the rest of the financial market. Thus, the information that is shared with respect to the government securities market is very critical, okay, and watched on the real time basis by the rest of the market participants. So let's come to know that this government securities market is a very critical thing to deal with. Okay, the government securities consist of both the central and state government securities, and RBI act as a debt manager for the center and the states. As a debt manager, RBI is see RBI is not only the issuer, okay, but also procedurally maintains a record of ownership and the transactions that take place in government securities. RBI is also the regulator of the market for government securities. So RBI also regulates these securities too. Okay, it helps in dealing with these securities. Now, one more thing to inform you in this, that it is observed that data disseminated by RBI on the government securities market compares well with the international standards. This comes with a high value, right? Significant improvements have been undertaken in the recent past. Technological improvements underway provide further avenues for improving the system. So that is all for this government securities market, right? We have come to know a lot of points about this, that how it's so much important in our country to deal with such tradable securities, right? Now let's come to foreign exchange market. So this foreign exchange market deals with FEMA and everything which you have already studied, right? So see, this is an over the counter marketplace. Okay. Now why it's called so? Because it determines the exchange rate for global currencies. Okay. It is by far the largest financial market in the world and is made up of a global network of financial centers that transact, for 24 hours a day, closing only on the weekends. So, I guess all of you know this, that this market goes along whole 5 days, and there are 2 days holidays if anyone works in the securities market, right? Saturday and Sundays basically are holidays for them, right? But if the market is open, they need to go. When suppose market is open on Saturday, then they all have to visit their company and they have to trade also. Okay, generally it remains closed on Saturdays and Sundays, but not always. Sometimes it happens that it is open on few occasions. So people have to visit up their companies, okay, for trading. Now, currencies are always traded in pairs, so the value of one of the currencies in that pair is relative to the value of the other. Okay. Now see, the foreign exchange market simply is also called forex or currency market. It was one of the original financial markets formed to bring structure to burgeoning the global economy. This asset class makes up the largest financial market in the world in terms of value of currency units being traded. Okay? Value of the currency depends on whether it is a free float or fixed float. Free floating currencies are those whose relative value is determined by free market forces. Okay? Whereas a fixed float is where a country's governing body sets its currency's relative value to other currencies, often by pegging it to some standard. Okay, so there are a lot of things we came to know regarding the foreign market also. Okay. Now let's come to capital market also. Okay. Now what do you mean by capital market? See, capital markets are financial markets that bring buyers and sellers together to trade stocks, bonds, currencies, and other financial assets. Capital markets include the stock market and the bond market. Very simple definition regarding the capital market. Okay. Now, see, there are two types. No, sorry. There are three types of capital markets. First is primary market, second is secondary market, and the third is money market. Now, the question arises that who controls this capital market, right? So, our one of the famous institution manages this market, which is known as SEBI, which is the Securities and Exchange Board of India, which is a regulatory authority for the capital market. Okay. Capital markets are also those where savings and investment are channeled between the suppliers and those in need. Even it is where businesses and governments raise funds by issuing stocks and bonds, connecting investors with opportunities to grow wealth. Okay. Yes, one thing I want to say that there are losses in capital market, no doubt. Okay, but if we have a good knowledge about various stocks, okay, like suppose I will mention one of the important stock I know, that is ITC. Okay, very less investors are there who are upset with ITC. Okay, because basically it never gives any loss. Okay, basically that's not a fixed thing to say, but it I think it never dissatisfies their investors. Okay, let's come to derivatives market. So now what is derivatives market? See, derivatives market is involved in trading financial instruments like future and options. These derive their value from underlying assets. Investors use derivatives for speculation. Okay, see, I'll give you an example. See, there are four types of derivatives. Okay, you must be hearing about forward contracts, futures, swaps, and options. Now, all these four things are the part of derivatives. Okay, now let's come to the next slide. Let's check what we have in the next slide. Okay, a very good topic, which is financial instruments. Now, first point, it's commercial paper. So, what is commercial paper? Let's come to know. See, a commercial paper is a very valuable thing. It is a very common form of unsecured short term debt issued by a corporation. Okay, this is typically issued for the financing of payroll, accounts payable, inventories, and meeting other short term liabilities. Understood? I guess it's understood because it is a very common paper used. Okay, for the financing of accounts payable, for inventories. Okay, now as I said you all about the treasury bills, okay, which is valid for some time. Now, what is this? Let's come to know in detail. Now, see, a treasury bill is a type of money market instrument which is issued by the government of India. The bill is issued as a promissory note of repayment in the future. The purpose of this treasury note is to secure funds to meet the short term fund requirements of the government. And why is it issued? The biggest question comes here. So the biggest question's answer is the treasury bill is issued to minimize the fiscal deficit of the country. Okay, currently, see, currently the 3 months treasury bill rate is 4.19% compared to 4.20% the previous market day. Okay, and but one more thing to say you is that it is considered one of the safest investment option as they are backed by the government. Okay, so that's it for treasury bills. Okay, now let's come to certificate of deposit. Now, what is certificate of deposit? It is a type of savings account offered by banks and credit unions. It pays a fixed interest rate for a set period of time. Basically, it is an investment tool offered by financial institution in which investors have to deposit their funds for a specific term. Why they have to deposit? They have to deposit for earning premium interest rates. Okay, CDs offer guaranteed higher return to investors on completion of the term. Okay, one more thing to say is that it is a fixed income financial tool which is governed in a dematerialized form, right? That's it for this certificate of deposit. Okay, now let's come to commercial bills. Okay, commercial bill is an instrument that helps all the companies registered to get advance payment for the invoices they to their customers. Commercial bills are issued for financing needs of the medium term. It comes into effect only after a sale has taken place. Okay? Unless and until sale has not taken place, this instrument will not be issued. Okay? Now the question comes here is who can issue the commercial bills, right? So what we can say, the bank issues commercial bills on invoices and finance raised by the firm. Both banks and large corporations make use of commercial paper. Okay, now how will bank deal with it? As I said before, that bank will help only if sale has taken place, right? So after that I want to say that bank will release their payment in advance on an invoice showing goods on sales. So if bank will see sales has been done, then bank will help by releasing their payment. The instrument is used within an year. Okay, that's a very simple definition and detailing discussion about commercial bills, right? If you can have any doubt, you can ask in the comment section. Okay, now let's come to repurchase agreement. Now, this agreement is done. It is a very short term agreement, first of all. Okay, and this type of agreement is to sell the securities and repurchase them later at a slightly higher price. First of all, selling securities, right, and then purchasing it again with a higher price. This is a simple definition of repurchase agreements and explanation. Okay, once again, I want to explain this. that it is a very short term agreement, okay, to sell the securities and repurchase them later at a slightly higher price. Okay, now there are certain benefits of this repurchase agreement. What are those? See, as a secured form of lending, repurchase agreements offer better terms than money market cash lending agreements. Okay, that's the main thing of the main benefit of the repurchase agreement. Okay, okay, so we are done with financial instruments. Now let's come to, okay, see, financial services as I explained in the first introduction session, that fee-based services are the services in which the corporations or people or individuals take fee for giving their services. Okay, some of the fund-based services are like licensing, okay, leasing. All these are fund based services. Insurance services, you are doing some insurances, okay, of some individuals or some friends, and you are getting benefit. That is insurance services, you are getting paid for that. They are paying you with every month premium, and then they are getting the benefit. The insurer is getting the benefit of that, right? So that is insurance services. That's explanation of financial services. Okay. Now, great. Now let's come to GDP. You all are aware of what is gross domestic product. Okay. I'll just want to explain in one line. Okay. That what is GDP. Now see, GDP is needless to mention. Okay. It is needless to mention that the national income, that is national income of our country, is measured on the basis of GDP only. Okay, that's the main thing of GDP. Now, the growth of GDP in any economy depends on the increase in the proportion of savings and investment to the GDP of a nation. Securities market as a part of financial system contribute a significant role to continual economic growth. It is evident that movement of funds always flows from surplus to deficit sectors. In other words, those having surplus of funds lend it to those requiring funds to meet their requirements. Now, if there is any place which is having the surplus, okay, there must be some places which is having the deficit also. So what will happen? The institutions or places where surplus of fund will be there, they will help to those who is in need of those funds, right? Okay. See, basically GDP is a total monetary or market value of all the finished goods and services produced within a country's border in a specific time period. Right. Now, at this point, okay, just a moment. Now, how is the GDP calculated? This is also a main question that can arise in your mind. So basically, GDP is equal to private consumption plus gross private investment plus government investment plus government spending plus exports minus imports. Okay, so it is usually calculated by the National Statistical Agency of the country following the international standard. Okay, what is GDP per country? That is also a thing to know. It is market value of all the final goods and services from a nation in a given year. Okay, now let's come to the next part. Okay, great. Now we have money market to know. Our topic for the structure of institution is over. Financial structure is over. Now our topic comes to money market. Okay. See, Money market is an integral part of the financial markets in India. It provides an opportunity for making a balance between surplus of lenders and requirements of borrowers for short periods. Truly speaking, the money market provides a focal point for central banks' intervention for influencing the liquidity in the financial system. The money market can be divided into two components that I explained in the first part: organized money market and unorganized money market, right? Both of these components consist of several constituents. The money market consists of number of instruments which collectively constitute the money market. Some important money market instruments are as below. As I've explained you all the points: call money, treasury bills, commercial papers, commercial bills, certificate of deposit, and the last is repurchase agreement. Now, out of these, I didn't explain you what is call or notice money. Okay, see, it is a very easy thing to know that call money is a type of short-term interest earning financial loan. Okay, what we have to do with this? It is a loan that the borrower has to pay back immediately when the lender demands it. Call money means whenever a call comes, we have to pay that. That's the basic thing of this point, that this money. Okay. Again, I'm explaining you so that you can understand it properly. It is any type of short-term interest rate earning financial loan that the borrower has to pay immediately whenever the lender demands it. Okay, I put it is very much clear. Now let's come to the next point, which is features. There are multiple features of money market. Okay, it is a market merely for short term funds or financial assets called near substitutes for money. It deals with monetary assets whose period of maturity is less than or up to 1 year. It deals with financial assets which can be promptly converted into money without loss and with minimum transaction cost. Normally, transactions in money market take place through phone, oral communication or mail. Relevant documents and written communications for generating fund are exchanged subsequently in this market. There is no formal place of market like stock exchange where stock market transaction take place. Transactions are made without the help of brokers. The main intermediaries of money market are central bank, commercial bank and NBFCs, discount houses too, etc. Now let me explain you in a gist few points which I have taught you previously. Just a moment. See, we read about financial services, right? Let's come to the previous PPT, previous slide, which comes to financial services. Okay, now I didn't explain this in detail that what is financial services here. Okay, in this PPT. Now see, financial services basically are the services, okay, that should be there in the finance structure of our economy. Without this financial services, the economy will low down. Okay, so financial services are the services that ensures the smooth flow of financial activities in the economy. Now, these three things are the financial activities only, which includes fee-based services, fund-based services, and insurance services. Okay, all these are the financial activities only. Through this only, there should be a smooth flow in the economy. Okay, these are an important component of the financial system. They cater to the needs of financial institutions, financial markets, and financial instruments, which are geared to serve individual and institutional investors. It includes banking, insurance, stockbroking, and investment services, as well as a wide range of other business and professional services. Okay, now this is completed financial services. Now let me explain you 2 points about financial instruments. Okay, we all have studied about all these instruments likewise line wise, right? So it what is this financial instrument? We read about the examples, what are the types of financial instruments. Now let us come to know about actually what is financial instrument, what is the gist of financial instrument. So it is a contract between two parties, right? So how I can say it is a contract between two parties? All these commercial paper, treasury bills, certificate of deposits all involves two parties, right? Unless I give you, you will not take this, right? Unless I give you after signing the document, you will not give me loan. So basically all these involve two people. Okay, one has to sign, one has to take. So it is a contract between two parties. The contract give rise to a financial asset of one party and a financial liability of another party, right? So now I think this is very much clear to all my undergraduate students with the help of examples. Okay, GDP is over, money market is over, features we have read it properly. Now it's recent implementations. Okay, so see, there are so many implementations that we got to know in our budget 2025. Few of the points I have taken out from our budget 2025, and then I have noted it down here for you all so that you can come to know the recent implementations that will help in increasing the financial structure of the economy. Okay, so that's why I have taken and jotted down few implementations. Now let's discuss all the 14 of them, which will surely help to grow financial institutions. Okay, to help our India financially grow. Number one is another 10,000 crore to supplement fund for startups by SIDBI. Okay, so previously also crores of money was given to startups for incorporating their startups and then building it up more. In this year again they have given crores of money to startups for increasing their value. Okay, now what will happen with this will encourage the startups, right, to register themselves, to enhance more and more and to improve their work in their own made startups, right? Number 2, no income tax on average monthly income of up to rupees 1 lakh to boost middle class household savings, significant enhancement of credit with guarantee, and will cover MSMEs from 5 crore to 10 crore. Okay, and a good thing that happened is that salaried class to pay nil income tax up to 12.75 lakh per annum in new tax regime. Sixth point is significant enhancement of credit with guarantee to cover cover to MSMEs from 5 crore to 10 crores. I guess there's a mistake here. Just a moment. Okay, I repeated this point. Okay, leave it. Yes. That's the extra point which I have added. Repeated point. Just a moment. Okay. Now let's come to seventh point. There is some counting numerical mistake. Wait. This will be 4. I guess there's some keyboard problem. Okay, leave it. I will discuss. There's some keyboard issue, I guess. Few buttons are not working properly. Okay, see. A national manufacturing forbid me for this numerical problem. Okay, because of some numerical keyboard issue, I'm not being able to correct it as of now. Sorry for that. I'm big apology for it. A national manufacturing mission covering small, medium, and large industries for furthering Make in India. Okay, there is also a Center of Excellence in Artificial Intelligence for Education with a total outlay of 500 crore modified UDAN scheme to enhance regional connectivity to 120 new destinations. This is a very, very, very super modification to happen. Why? Because AI is there. AI is getting a lot of enhancement in this budget, and it will definitely improve a lot of things. Then 20,000 crore is allocated for private sector driven research, development, and innovation initiatives. FDI limit is enhanced for insurance from 74 to 100%. And one more thing is has happened in the income tax department thing, which is the returns time limit has been increased from 2 to 4 years. Now all these budget implementation which has happened, it will definitely help to improve the economy. Just two things more to say you all. One more thing has happened is that in this union budget, okay, it has also continued exemption on BCD on raw materials, components, consumables, or parts for shipbuilding for another 10 years. Okay, and it introduces a series of measures which also aims at strengthening the micro, small, and medium enterprises sectors. In the previous budget also, it gave importance to MSME sectors. In this year also, as I explained you in the fifth point, that it has covered MSMEs from 5 crore to 10 crore. It has given enhancement of credit with guarantee to MSMEs. Okay, so previously in previous budget also they have held MSMEs, right? And in this year also same, they gave a great guarantee cover to MSMEs, right? Recognizing its role as one of the key engines in India's journey of development alongside agriculture, investment, and exports. So that was a very that was a very great initiative taken by our finance minister. Okay, now that's it for today. Thank you so much for giving me this opportunity to teach my all undergraduate students. It was a great privilege to come in this platform and give speech to you all. Thank you so much.
Thank you so much, ma'am, for your lucid explanation on the structure of Indian financial system. Uh, Undergraduate students will surely benefit from this lecture. Thank you so much, ma'am, once again for bearing time with us out of your busy schedule. Thank you so much, ma'am.
Thank you so much, sir. It was great having you for taking such a great initiative to teach them. Thanks a
Yes,
lot.
yes, ma'am. Thanks to all whole KBSA organizing team. Okay,
Thank you.
ma'am.
Thank you so much. The Kolkata
Thank you.
Bidhannagar Society for Academic Advancement also for giving me such a great opportunity. I loved to teach you all. Thank you
We,
so much.
we hope we will get you once again for some lectures in upcoming future. Thank you so
Oh,
much.
that's great. That's great. That's a great privilege to know. Thank you.
Thank you, ma'am.